Today we're going to talk about Tesla's Q2 2021 earnings. First, we're going to talk about 7 key takeaways that I thought were the most interesting from the earnings conference call. Second, we're going to go over 2 things that Elon Musk did not talk about on the call that I was hoping to hear more about. And finally, we're going to take a look and see how my EV pure play portfolio is doing. All this right after. I am not a financial advisor. This video is for entertainment purposes only. Learn to invest like a wolf at your own risk. What's up, everyone? Welcome back to my channel, Wolves of Investing. My name is Donnie Nguyen and I'm the founder of Wolves of Investing. If you're new, my channel is primarily about investing in the stock market. If you want to learn how to achieve financial freedom through investing, be sure to click on that subscribe button and notification bell if you haven't yet. And please remember to drop a like on this video if you enjoy it, as it truly helps out the channel. And be sure to check out my Patreon if you want to get more insights into my SPAC portfolio or my growth-oriented long-term portfolios, or if you just want to support the channel. And also be sure to check out my free Discord to talk about SPACs and other stocks with other members of the Wolves of Investing community. And finally, be sure to check out M1 Finance's $50 referral bonus, which goes until September 7th. If you sign up with my link in the video description and deposit $100, both you and I will receive $50. So without further ado, let's get right into it. The first key takeaway from Tesla's latest earnings conference call is that Tesla absolutely crushed it. Tesla had record deliveries of over 200,000 vehicles, achieved an operating margin of 11%, and exceeded $1 billion of GAAP net income for the first time in its history. Total revenue grew 98% year over year in Q2. At the same time, average selling price declined by 2% year over year, which is aligned with Tesla's goal of making electric vehicles accessible to as many people as possible. Tesla had free cash flow of $619 million, repaid $1.6 billion in debt, and had $16.2 billion in cash and cash equivalents. Most notably, Tesla's GAAP net income exceeded its revenues from regulatory credits by a wide margin. GAAP net income was $1.142 billion, in which only $354 million came from regulatory credits. This is extremely important because famed investor Michael Burry, who had a short bet against Tesla earlier this year, mentioned that Tesla's reliance on regulatory credits was a red flag. So who knows? Maybe we'll see Michael Burry remove his short bet against Tesla in the near future. The second key takeaway from Tesla's earnings conference call is that the global chip shortage is quite serious. Elon Musk called chips the slowest part in Tesla's supply chain. If everything in the car was built except for the chip, Tesla could not make the vehicle. Some of these chips control things like an airbag, which, of course, must be delivered in vehicles. Elon said that it's too difficult to say how long the chip shortage will last, that this is out of their control, that it seems like it's getting better, but it's hard to predict. And the only reason Tesla achieved its record outputs despite the chip shortage was by an enormous effort from within Tesla. Tesla was able to substitute alternative chips and write the firmware in a matter of weeks. Finding new chips, writing new firmware, integrating it with the vehicle, and testing it. This is insane that they were able to do this, and one of the reasons I believe Tesla is head and shoulders above its competition. But it's something that they shouldn't have to do, and it's probably not sustainable. So it's going to be very important to keep an eye on what's going on with the global chip shortage. The third key takeaway from Tesla's earnings conference call is that FSD subscription launched in the previous month. They expect full self-driving to build slowly and gather a lot of momentum over time. Elon thinks that FSD subscription will probably be a significant factor next year. He called full self-driving a 2 steps forward and 1 step back situation. He also said that he is highly confident that cars will be able to drive themselves with safety levels substantially greater than that of the average person. The fourth key takeaway from Tesla's earnings conference call is that its gigafactories, Giga Poland and Giga Texas, are almost built out. In fact, Elon was doing the earnings call from Giga Texas. New design of the Model Y will be in limited production in both factories later this year. So it seems like Tesla is able to build out a gigafactory in about a year, sometimes less than a year, and then ramp up to volume production in about 6 months. So that's pretty incredible that they can get to volume production in about 18 months after starting the build of a new gigafactory. The fifth key takeaway from Tesla's earnings call is that there will be massive increase in battery cell availability next year. This will allow Tesla to build out their Megapack and Powerwall batteries in addition to supplying their vehicles. Tesla will have the flexibility to route oversupply of cells to Megapack and Powerwall, or scale back on Megapack and Powerwall to prioritize vehicles. And on a related note to batteries, Elon mentioned that he expects Tesla to use zero cobalt in its batteries in the future. That there's a long-term shift to iron-based lithium-ion cells over nickel, and that he thinks there's a good chance that all stationary storage, such as Megapack and Powerwall, moves to iron-based cells, whereas nickel would be used for things such as long-range road transport, ships, and airplanes. This is important because there's a lot more iron in the world compared to nickel, and there's way less cobalt. And on another related note to batteries, Tesla has successfully validated the performance and lifetime of its 4680 cells produced at its Kato facility in California. But they've still got some work to do before they can achieve volume production. The sixth key takeaway from Tesla's earnings conference call is that they will open up the supercharger network to other EV manufacturers later this year. This opens up another stream of revenues for Tesla. Increasing the utilization of their network reduces costs, allows Tesla to lower charging prices for all customers, makes the network more profitable, and more importantly, it will help to increase the global adoption of battery electric vehicles. In North America, other vehicle owners will need an adapter to use the Tesla superchargers. And the seventh key takeaway from Tesla's earnings call is that Elon will most likely not be on future earnings calls unless he has something important to say, although he will still do the annual shareholder meetings. This is kind of a bummer because I find that Tesla's earnings calls are one of the most informative and educational and entertaining with Elon Musk on the call. On a related note, one of the retail investors asked if Elon could do an interview with one of the popular Tesla-focused YouTube channels, and Elon said that he could do that. So I think that that would be awesome and something to look forward to if and when that happens. So 2 things that Elon didn't talk about on this call were Tesla's investment in Bitcoin and Tesla's plans for HVAC. Bitcoin is definitely something that I was looking forward to. As many of you know, I do have an investment in Bitcoin. But Elon recently had a meeting with Cathie Wood of ARK Invest and Jack Dorsey of Square and reiterated that he is a strong supporter of Bitcoin and will likely allow customers to purchase vehicles with Bitcoin again in the future. And I'm really excited to hear about the development of HVACs, which Elon Musk had mentioned on a previous earnings call. I know a lot of people are excited about full self-driving and robotaxis, and I am too, but I'm also really excited about the possibility of Tesla creating super energy efficient HVAC units. So I hope to hear more about that in the future. Now let's take a look at my EV Pure Play portfolio. For those of you who are new to my channel, this is a highly concentrated portfolio that I'm building on M1 Finance to invest in the EV sector. I'm currently investing $50 every week into the portfolio, and my plan is to get around $20,000 to $30,000 into the portfolio in the next 10 years. This is an extremely long-term investment that I'm making, and I'm expecting a lot of volatility. So as you can see, my portfolio is currently down by 24%, and Tesla is the only investment with positive returns. I've only invested a little over $2,300 so far, so I have a very long way to go before I get the rest of my investment in. All of these other companies are either SPACs or former SPACs, and many of them are reporting earnings soon, so I do plan on putting out videos on them once that happens. So stay tuned. All right, so let me know what you think about Tesla. Drop me a line in the comments. Be sure to leave a like on this video before leaving. Thanks for watching, and I will see you next time.